Hi everyone. Thank you for taking your time out from your busy schedule and joining on this webinar. We at AIF PMS Experts India, we are thrilled to announce our brand new show, which is Ask the Expert Show. Through webinars, we aim to share insight into diverse asset classes, forecasting knowledge against among our investor community. So my name is Devanshu Bindlish. I am the Vice President of AIF PMS Experts India. With me, I have a speaker, Mr. Ayush Aggarwal, Director of SMC Group and Chief Investment Officer of from SMC Global Securities and Securities Limited. And the topic of webinar today is market outlook and wealth creation through PMS. So let me take a moment to introduce Mr. Ayush Aggarwal. So Ayush Aggarwal is a young and dynamic leader who has established himself as a visionary with a profound impact on the financial markets. He has been managing and heading the portfolio management activities at SMC Private Wealth, where he ensures that every SMC client benefits significantly from his practical and pragmatic views. He is MBA from SP Jain Institute of Management and Research, Mumbai, has helped him in gaining an in-depth understanding of various micro and macro factors driving the economy and financial markets. So, welcome, Ayush ji. How are you?
Thank you, Devanshu. I'm doing great and very excited to share the insights on the markets and specifically on a day when market has fallen. So I believe people will be very excited to hear what should
Right.
market look like from here.
Yeah. So, Ayush ji, so as you know, today's topic is to talk about market outlook and understanding that how we can, how our investor can invest and take a benefit this from through the route of PMS. If you can throw some lights on that, it would be a great help. You are the host
Sure,
now.
sure. Thank you so much. So I want to share my screen. Can I share the screen?
Yeah, sure. Please go ahead.
Okay. So as we were discussing what is the market outlook and how Indian market should perform from here. So I mean, if you are into stock markets to make wealth, then you have to be bullish. So being bullish is the first thing if you want to make money in market and being bullish at the right time when there is, fear on the streets. So that is the best time to be bullish. And well, I to definitely believe that we as Indians are in the right place at the right time. So when I say right time, so why is right time? I mean this time is right. So reason is the second point, which I will highlight the market cap disparity, which is the combined market cap of all listed companies in US. I mean the combined market cap of just two companies of US, which is Apple and Microsoft. Though of course Nvidia
Mhm.
has in fact surpassed Microsoft now in terms of market cap. So that way कोई भी मतलब top two हम ले लें उनमें से. So that way only the top two combined market cap of just two companies of US is more than the combined market cap of all the listed companies in India. So we can understand the potential Indian market has. And for an example, so Reliance is right now, 20 lakh up to, in fact, because it has fallen in last 1 month, a good 10 to 15%. So right now the market cap of Reliance is around 18 lakh crores. And you would believe the sales of that company, Reliance, is itself 10 lakh crores. So, I mean, it is only 1.8 times the market cap of the sales of Reliance, the largest company in India. So he can understand in India, small caps are valued around 5 to 6 times of their sales. And Reliance being the largest company is only 1.8 times. So if it even becomes, I mean, 3 times, then the share price will hit 50% more from here. So, so that understanding itself tells you that there's a huge
Mm.
mismatch in the, market cap the Indian stock market has compared to the potential the Indian companies have. So the disparity, I mean,
Right.
yeah. So that point I want to share ki the disparity is huge. So there, and why is it? Why is that ki there the market cap is so high and Indian equity market cap is so low? So the reason is that in US, 67% of their citizens of their population invest in equity markets, whereas in India it is only 5 to 6%. So that number, when it becomes 20%, our market cap will be four to five times of today's. And and after COVID, again, the third point that I want to, second point I want to share is the third point here, which is the psychological shift that people have after COVID. So before COVID, they used to, redeem money as and when there was even small panic in the market, and people will go कि भाई market गिर रहा है तो पैसा निकाल लेते हैं. That used to be the ideology of retail as well as even large investors who used to think like that. But when COVID happened, equity इन्वेस्टमेंट तो छोड़ो, आपको लाइफ का नहीं पता था कि व्हाट विल हैपन. सो एट दैट टाइम पीपल रियलाइज कि ठीक है मार्केट गिर रहा है, दे एंड मार्केट फेल ऑलमोस्ट 30 to 50% इन जस्ट 1 month. So they didn't have that time to look at their investment, and it was already from 100 it was 50. So people, and after when it was 50% down the investments, people must have thought कि ठीक है यार अब क्या बेचेंगे, let's stay put in the market. And that is when they saw the magic of stock markets, that from here in just 2 years that money has doubled. And that is the power of stock market, that people have realized if you put money when the markets are down, that is in fact the right time. And now after that, post COVID, now we will come to the first point, which is my third point, that SIPs are now hitting inflows of 25,000 crores per month, despite the uncertainty we are seeing right now globally. So if you see these 3 points, if you are able to understand these 3 points, you know where India is going, and the potential is humongous in Indian markets. And
Right.
hence one should invest in stock markets, irrespective, if they have, of course, a long-term horizon. Then there's no better asset class than equities, in my view.
Yeah. Right, Ayush.
Yes.
So as equity markets are doing very well in India, and it is, of course, it was positive for India, and India will continue to grow from the speed which is growing. And I don't think much, bearish moment for India for next 10 long years. Over to you,
Absolutely.
Ayush.
Yes, yes, sir. So now, can I come to the PMS part?
Yeah, sure. Please go ahead.
Perfect, perfect. So for everyone's reference, now we'll be talking about what is PMS and why. Of course, there are many PMS in the country, but we as Essentians have our own in-house PMS, and I will be talking on that. So coming to PMS, so for the knowledge of the audience, just for a basic reference, because I always believe that do not assume your audience. So I will give a brief of what is PMS, and then we'll talk about SNC PMS as well. So what is PMS? It means that you are giving 50 lakh to the company to manage your investments, to manage it on behalf of your investments, wherein the decision making is on the fund manager, and you have your piece, and the fund manager will manage your money. So minimum amount that is there by SEBI, it is a regulated product. So the minimum amount is 50 lakhs. That is, it used to be 25 lakhs around, 2019 or 2018. Around 5 years ago, it was that amount. But as of today, 50 lakh is the minimum amount that you have to give to start a PMS account. And so what are the ways in which people can invest in PMS? Either they give and I will take an example of 50 lakh only, because it is the minimum amount. Of course, by 50 lakh, I mean 1 crore or any other limit, but minimum has to be 50 lakh. So I will take the example as 50 lakh. So one way is that the investor can give direct check to the company of 50 lakhs. Another way is that they transfer shares which are where the market value of their holding is 50 lakhs. And another way is that they give some shares and some check, but the total amount has to be 50 lakh. So that is how you can start with PMS, with any PMS, SEBI registered PMS company like SNC. Yeah. Then, of course, after that, top-ups can be done in multiples of lakh. It is not that you have to give another 50 lakh as top-up. So top-up can be done even like 5 lakh, 10 lakh, or whatever amount you can uh, top up with in the PMS. Then exit loads, that depends on the company to company. But for us, in SMC, it is 3% for the first year if you redeem your PMS. In the second year, it is 2%. In the third year, it is 1% of the amount that you have given. So that is the and after 3 years, because we always believe that once someone is investing into PMS, that is always for long term. And by long term we mean minimum 3 to 5 years. So after 3 years, there's no lock-in. So we say after 3 years, if you are taking your profits or redeeming your account, you will not pay any exit load. Yeah. So this is the basics one should know for PMS. And again, when it comes to basics, I think I would again share that it is purely long-term investment. That is what we look for when we ask the clients to invest their money. So long-term investment rakhiye, do not fear with short-term volatility, and invest for long-term. And one would say ki what returns one should expect if you are investing in PMS. So देखिए, in last 3 years, market has given huge returns. Even I mean, after COVID, one can see that even our RPMS gave 84% net return in FY20 to 21, because it was post COVID year, and the market gave around 60%, that is the Nifty, and RPMS gave 84% returns in that year. But if you ask me, what is the CAGR one can expect for next 3 to 5 years or 10 years? That answer remains 15 to 18%, because we have seen the bull cycle, but we will also see the bear cycle. So we have to be in all the phases of the market, and that is the beauty of the market. That if you stay put, you will gain 15 to 18% CAGR in long term. Yeah, and in fact, I would also like to share that we have just completed 5 years. Our PMS has itself completed 5 years by September end, and again, our return is 18%, almost 18% CAGR net return to the clients. So, as I told you that in 20 to 21, we gave 84% return. But if you see the 5 year period, it is around 18%. So that is how the market, it is like ultimately, if you are able to beat 15 to 16 to 18%, you are in very good hands. That is what I would say when it comes to PMS or even equity investments, right? Now, coming to why SMC PMS, because of course there are there are many PMSs in the country. I would not like to take the names, but we all know that all the banking companies or say brokers in the company have their own PMSs. But again, why SMC PMS? So this is the mnemonic that we have made for our PMS. I will explain each mnemonic with a slide, but this is the mnemonic which is pro ABC. So we say that we are pros in ABC of investing, and that is how we. So just naming the initials, I will then come to the slides explaining each of them. Then so why SMC PMS? First is philosophy of investment. So we have a very clear philosophy on how we invest in the stocks that we take. What is the stock selection criteria? So that I will explain in the first slide. Then risk management. Like, of course, you take good companies, but if you put like 50% in one company, then and that company falls. For example, one company has fallen big today. So your portfolio will, you will lose 20 to 30% in just one day because of that wrong investment or in fact, wrong allocation, I would say. Not just investment, it was wrong allocation. So that comes in our risk management strategy, how we manage risk. Then we also try to outperform in negative markets, and that has been our history, which I am very proud of. That if you can outperform in a negative market, then it is easy to perform in, of course, positive markets. So outperformance in negative market is one where we believe that we have an edge over others. So that is another USP of SMC. Then alpha stocks. By alpha stocks, it means multi-baggers that we are able to pick in our PMS. In the 5 years that we have passed, we have almost like 5 to 10 companies wherein they have made 3 to 5x of the entry price we made. Then one of the biggest USP of our PMS is that is pro ABC ka B, which is brokerage is zero. So when we take money in the PMS, the churning that happens, there's no cost to the client, to the investor. So we are not charging any brokerage on the buying and selling part in the PMS. And that again is very unique in the industry. I don't know any other PMS that is doing it, but we are doing it. Hence a major cost. And let me tell you, this brokerage, which is not shown as a fees, because it is done only when buying and selling is done, and it comes in your price. So sometimes even the investor is not known how much brokerage is paying. But I can tell you it is around 1.5 to 2% annually, because we used to charge it earlier. So we know how much it cost. And that is a saving with SMC PMS, that you are not giving a single paisa in brokerage. Of course, STT is there that we have to pass on to the exchanges, which is a security transaction tax, but there is no brokerage to the client that we used to charge to the client. So that is a big saving to the clients. Then last but not the least is consistency in style of investment. So we have a very clear view. See, in markets, there are 1,000 companies. So you have to be clear what you don't want to buy. And that is what we say in consistency in style of investment. We are very clear that we don't want to buy groups where there is some corporate governance issue. And having said that, we have never invested in the company that has fallen today. So the reason was same that, their debt was very high since starting, and the valuation of the stocks were very high. So, I mean, these type of things help clients in such times, in today's time when stocks like those fall big. So you realize the importance what not to buy in a bull market or in any type of market. So yeah, I will be explaining all of these one by one. So by P, it is investment philosophy. So when we buy any stock, these are the four parameters that we look before deciding we have to buy it or not. First is the valuation, which is very rare in today's time because you're not getting a good company at good value. So a company may be a HUL. I didn't want to take names, and again I will refrain from it. So be it largest company, but if the P is 50 to 60 and there are no earning potential is low. In See, if the P is 50 to 60, but the earning potential is 10 to 15, there's no reason to buy it in my view, irrespective of the fundamentals. So valuation becomes the first criteria to buy any company. Then again, the future outlook, we say the earnings growth in the company, the industry. So we do not want to invest in companies which are backward. I would say sunset industries. For example, cable companies. So earlier we all watched TV on cable, but we all know it is OTT time. So that company itself, that industry itself is on a downward trend, and I would say it's a sunset industry that now OTTs are taking over. Like we are having Zoom. I think in three like last 5 years, if someone invested in Zoom, it would grow. So the point is that you have to invest in rising industries, sunrise industries. So size of the opportunity, industry prospects क्या हैं, sustainability of the future earnings. By that even जो ये point है sustainable of the future sustainability of the future earnings. So in that point, I would say that in COVID, everybody wanted to because the masks were getting famous. So there were many companies that got into that business, but there was no sustainability. It happened, but now we are not wearing masks. I mean, it was a time for 1 to 2 years that yes, there was very high sales and requirement was there to wear mask. But as of today, I think whenever there are times that okay, COVID has again come, then we will wear mask. But otherwise, we are not wearing. So I mean, I'm just telling how we see at companies before buying. Is there sustainability of that thing that yes, it will still happen going forward for 10 years or no? If no, then we will not buy. When it comes to IT, so that is one sector that we believe that sustainability will be there for long term. I'm not saying IT by saying that I will invest in the large cap IT stocks because I think again these are very large companies. So earning visibility may not, I mean growth potential may not be there. But there are companies which are mid cap IT companies, emerging IT companies, which I will name because when I will share the companies that I have, I'm very transparent and would be happy to showcase my own portfolio in the PMS that we have. So there are companies that we believe are emerging IT companies that we would invest. So future outlook matters. Then of course the fundamentals, irrespective of anything, the company should be profitable. The company should have strong CAGR returns in sales, profit after tax, and even cash flow should be positive. So all these things come into fundamentals and corporate governance. So again, the promoter should be, there should be no criminal track record of the promoter, or there should be more shareholder friendly decisions. Like there's a company, metal company, which used to which tried to delist the company at a very low price, voluntarily tried delisting at a price which was I would say one-fourth of current price. And so they tried at the time of COVID when the share price had fallen like 50%. So if there's a promoter who's trying to delist and it's a very negative for the minority shareholder because you are telling the shareholders, give me the company at this price. So he is trying to gain and the investors are losing. So if we identify such promoters, so again, it's a red flag and we would not want to invest in that company. So these are the four basic and broad parameters that we see before investing into any company. So that is the first pro ABC ka P, that is philosophy on investment. Then R is risk management policy. So what we do, So these are clear parameters on how we manage the risk in the portfolio. And I always believe that market तो बढ़ ही जाएगा और आपको पैसा भी बन जाएगा, पर जब मार्केट गिरता है, how you save your money और how you fall less, that is more important to पैसा कम गिरे, that is more important in bear markets. And through these strategies, I will read one by one, that we position our portfolio as per market valuation. So R is a multi-cap portfolio. So we are not market cap agnostic कि large cap में ही रखना है, mid cap में ही रखना है, small cap में, जहां हमें value मिलेगी there we buy. So portfolio position to be as per market valuation. Second point is no holding should be more than 10% of the portfolio. So as I told you in the starting, we do not want to be slave of one company. If that company falls, our portfolio should not fall. So not more than 10% any company. In fact, if you ask me today, not highest allocation of a single company in our portfolio is 6 to 7%, not more than that, and that to a large cap. So these, I think, are very important things if you want to save the portfolio in times like these, like today and last. I would say around 2 months where the market has corrected 10%. And if you ask me, retail portfolios have gone down by 10 to, 15 to 20%. And that is why it is very important to manage risk in these times. Then exposure to individual stock, even that is not more than 25% in our risk management policy. Then very important point that I would like to highlight here is no illiquid stock. So irrespective of how good the company is, irrespective of good fundamentals and everything, but if the stock is illiquid, so you again become slave of that stock. Because if things go wrong, you would not be able to get out of the stock. You would not be able to sell the stock, because there will be too many sellers before you, institutions who would want to sell. And if there's no volume in the stock, by liquidity I mean volume. So if there's no volume in the stock, you will not be able to cut from that position, and you will lose big money there. Then again, we have a clear policy of having no cyclic stocks. Here I've mentioned minimum exposure. So yes, of course, there are exceptions, but we try not to have any cyclic stocks. By cyclic stocks, I mean the commodity stocks. So for example, any steel company, any metal company, any cement company. So we avoid such companies because we believe that they are directly related to the raw material that they are producing, and hence their price movement is totally driving the stock prices, and then their profits, which ultimately drive the stock prices. So we avoid the companies like that. And idle cash, we put it into liquid funds, which is very important because at least you're getting some interest on that. So it is around 6 to 7% any year that you get. So whatever idle cash we have, which is not invested in equity because of lack of opportunity in the market, or say that we want to wait and watch in the market, so we would rather put that into liquid funds. And again, we redemption for that funds is almost like in one day you can redeem that money. So whenever we see again that opportunity are there in the markets, so we'll redeem that and put it into, of course, the equity part. And of course, we buy only fundamentally strong stocks. That is again very important risk management that we believe, because not everyone is buying fundamental stocks. Some buy based on technical. So that is not our strategy. We only buy stocks that are fundamentally strong. So that is the risk management policy that we follow. Now I've come to the alpha stocks, which is the multi-bagger stocks that we have picked in our PMS in the 5 years that we have been. So one stock we picked is Ircon Limited. We bought at 42, and currently, which is 30th September ka price is what we have put. So it is around 228, which is almost 476% return it has given. I mean, we exited at 242, and currently the share price is 228. So it gave us 476% return when we calculated for 242, because that was our exit price and that is the return we have got. Then one of the biggest beneficiary has been PCBL for our investors, which we bought at 115. It was bought, I think, 1.5 years ago. And again, current price is though around 400, but on 30th September, it was 578. And we are still holding on to that stock because we believe there's still potential in the company to grow further. And as per 578, our returns are 403%. The stock has made. Similarly, IRFC, which we identified uh, just after I think 6 months of the IPO. So we bought at 21 because the entry price matters a lot in my view. Though if you see the difference between the current market price that is on 30th September and the exit price, that is huge. But the reason that we exited at 77, which still gave us 267% return. So reason we exit because the market cap of that company was over 1 lakh crores, which we do not believe that the company deserves. So that is why we sold at around 80 or say 77 rate. Then Reddington India, another great company that we bought during COVID times at 55, which is around 185 right now, and it gave us 236% return. Now the best company, in fact, which is in the lowest column here, is Aster DM, which we still hold. And this company, you will see our entry price is 144, and for a fact, we have already received a dividend of 120 on this share, and our entry price is 144. So our cost is almost nil, and the price UNC is already 415. So 188% is only on the price that we have gained, but 120 rupee per share we have already got on this company. So these are the big multipliers that we have made in the PMS in the last 5 years that I've shared.
Sure.
Yeah. Then this is also very important. So when I say that we look at 4 things, but are we actually doing it? And this comes here. We are actually doing it because these are the attributes of our portfolio, of how our portfolio is made. So all the companies in the model portfolio are profit making. More than 85% are dividend paying companies. In fact, with that, I would also like to share that our dividend in the PMS is around 1.25 to 1.5%. Well, every year the clients are getting that much of dividend. Then 85% of the companies have a positive operating cash flow. Then return on capital employed, which we believe is very important when you pick any company, because that is the amount of earnings the company is generating on the capital they have employed, and that is weighted average ROCE of our companies is 13%, which is very good if you ask me, because it is into double digit. This is the weighted average, return on capital employed. Then comes to solvency. So all the companies in our portfolio, I mean, the debt equity is 0.7 of the 90% of the companies in the model portfolio have below 0.7. So मतलब एक से तो सारी ही कम है, और वैसे 90% की 0.7 से भी कम है जो debt equity ratio. That is very important again part of our portfolio. So we very important part in any portfolio or any company that we analyze is the debt equity ratio. So that has to be below 1. That is our criteria. And again, more than 90% of the companies in the model portfolio have interest coverage ratio above 3 times. So what that means is that the EBITDA of the company is 3 times the interest the company is paying. So you can understand that there will never be liquidity issues in the company, as in solvency issues. Then more than 80% of the companies have no promoter pledge. That again becomes very important part of the companies that we hold. Then valuation, because I told you that we are very specific on the valuation. So weighted average model portfolio P of our portfolio is around 15.7 times, which is almost 42% discount to the S&P 500, which is P at 22.7. And having said that, the EPS of our companies is at 44% premium to their 5-year average EPS. So EPS आपकी जो है वो 44% प्रीमियम पे है, दो द PE जो है वो 42% डिस्काउंट पे है. So that is the combination that we look for, that we are invested in great companies at good valuation and which will grow at great earnings. So if you have that combination, you are definitely here to make money. And that is what is the USP of SMC PMS. Again, shareholdings, when I come to shareholdings, so more than 80% of the companies in the model portfolio have promoter holding above 40%. तो जो कोई कंपनी है उसके अंदर 40% is the promoter, I mean 80% is the promoter, sorry 40% से ज्यादा promoter holding है, ऐसी 80% कंपनीज है in our portfolio. And similarly, institutional holding भी above 10% है. Institutional holdings means the shareholdings of the FII as well as mutual funds. तो उनको combine करके जो 75% of our companies have over 10% institutional holdings in their companies. So these were key why SMC growth PMS.
Perfect.
So I think, yeah. Then again, इतना कुछ बोलना है but performance भी होनी चाहिए. So that is most important. So here I will highlight कि if you see our performance 1 month, and again what I always say कि you have to uh, fall less in a falling market. So these are returns as on 31st August, or I mean 31st October, that is the last month. And you will see in 1 month when the Nifty fell 6%, BSE 500 fell 6.45%, almost 6.5%, we fell only 4.69%. So that is outperformance in negative market. That is what we say ki, and this is the biggest example. In fact, I want to share one more example how we fall less in a falling market. So let me share that slide as well, which is even more relevant at this point. Yeah. So when I say that we fall less in a falling market, so Devanshu, this is a very important slide that I want to share. So this data is as of 31st March 2023, and this we have taken from a third party website. I mean, this is the date after which market has actually risen, and these are trailing returns of that date. So 31st March तक का ये एक हमने comparison बनाया था. So and the names I have hidden because of course I don't want to name any other AMCs, but these I can tell you are the top 10 to top 15 PMSs in the country with by A1, and this is what they are done in just 1 year when the market had fallen, because Nifty was down 0.6% and BSE 500 was down minus 2.26%. And RPMS, which was up 4.72% compared to the negative returns of the market, and see what was the returns of these big AMCs at that time. And this is very relevant because, people make money in bull market, but what you do in negative market matters more, because you give up all the returns that you have made in the bull market if you perform like this in a negative market. So you can understand only in 1 year, this was the way those companies or those AMCs had given their returns. And even in 3 years, our return was 30.13%. This is the CAGR, which is again the highest among all these AMCs. So again, highlighting that point, outperformance in negative market, very important, and which is where SMC BMS is very good in our view. So the 4 year return, again, see long-term return ultimately matters. So 4 year return has been 24.63% CAGR. And these are, of course, net returns as we report to the SEBI. So 24%, 24.63%. And even in 5 years, as I told you that we have completed 5 years, so it is 18% CAGR. Now, these are the red flags that we see in the companies that we want to avoid, that we do not take. Well, if we see any such characteristics, any of the companies, then we will avoid that. So again, as I told you, that debt equity, if it is more than 1, we will avoid. Then free cash flow consistently किसी का negative जा रहा है for many years, then again we would avoid, because ultimately if cash flow is not coming, then you are not doing right. Pledge shares, if it is more than 25% and it is increasing, we would avoid. Again, previously reported frauds by the company or by the group. जैसे जो listed company है वो तो सही है, but maybe it has a subsidiary which is reporting frauds, then of course you'll avoid that. Then any qualification by the auditor in the annual report, that is very important कि अगर qualification है by the auditor in the annual report, तो again we will avoid. Then bad outlook by the management, this may be because of some government regulations or some change इन द पॉलिसीज, तो कुछ भी ऐसा होता है आउटलुक अगर मैनेजमेंट ने खराब दे दिया, देन अगेन वी विल अवॉइड. एक्सेप्शनली हाई पीज, अगर पी बहुत हाई है देन वी अवॉइड. एंड वेरी इंपॉर्टेंट इज क्रेडिट रेटिंग डाउनग्रेड. So if there are downgrades by the credit rating agencies, then again we would avoid investing in such companies. So this comes in the consistency of style of investment that we have, कि वो बड़ा clear है, that is listed there कि भाई ठीक है ये चीजें हमें avoid करना. And what we like is companies that stick to their guidance and do not overcommit. Because if you say, bhai, I will grow 15% and you grow 16%, that is better than saying that I will grow 50% and you grow 40%. So, I mean, say less and do more. That is what we walk the talk, is what we say. We like companies that are expanding their footprints with internal accruals. Of some companies we know that they're expanding, but they're expanding their debt as well. So we would not want to invest there. Rather, if you're doing through internal accruals, please expand. Then again, as we say that we try to find sunrise industries and try to tilt our portfolio accordingly. So we avoid the sunset industries and try to find sunrise industries. And size of the opportunity should be big and sustainable. The opportunity कितनी बड़ी है, that is very important. Yeah. So I think
Yeah,
Devanshu
I
have
think,
most of the point.
yeah,
Yeah.
yeah. Thanks for giving your presentation and thanks for informing about your fund. So, hope my investor community will reach us back and there's some queries about it. So, thank you for giving your, thank you for giving your time out from your busy schedule, Ayush, and coming in between in our investor community.
It has been
If
my pleasure, Devanshu. Yeah.
Yeah, if there is any more questions from the crowd, please feel free to reach us at AI www.aifpms.com or you can call us at 8368586435. Thank you, Ayuji. Thank you, everyone. Have a lovely day ahead. Take care. Bye.